Hello everyone, and welcome back to the channel. As many of you already know, I can't stop talking about how bullish I am on Google. It's currently my second largest holding right after Amazon. In this video, I want to lay out the bullish case for Google in detail and explain why its progress in quantum computing could become a massive long-term advantage. Alphabet hasn't exactly been the most exciting stock in 2025. For most of the year, it has underperformed compared to other AI-driven names and major tech giants, especially before August. But in my view, that underperformance has created a big opportunity. For the past 2 to 3 years, Google has been surrounded by skepticism, with heavy sell-offs following almost every piece of news. Yet despite all the doubt, the company has consistently delivered strong growth across all of its businesses, confirmed again in Q2. With robust fundamentals, massive potential in AI and cloud, and one of the lowest valuations among big tech, I continue to see Google as a strong buy. In its latest Q2 2025 earnings report, Google beat EPS estimates by $1.11, about 5%, and revenue by $2.4 billion, roughly 2.5%. These results were well ahead of market expectations, showing 13.8% year-over-year revenue growth. What's more encouraging is that revenue growth appears to be re-accelerating, from 11.8% in Q4 2024 to 12% in Q1 2025, and now 13.8% in Q2. The key takeaway for me is simple. All of Google's divisions are performing strongly, even while analysts remain skeptical. Let's start with Google's core business, search. Over the past couple of years, analysts have repeatedly questioned whether search can maintain its dominance in a world where AI chatbots like ChatGPT and Claude are becoming more popular. This concern has weighed heavily on Google's valuation, but once again, Q2 results proved the critics wrong. Search revenue grew 12% year over year, even with a small dip in market share. The growth pace hasn't slowed for 2 years, despite AI competitors entering the market. That shows us something important. Google's strategy of integrating AI into search is working. The company also benefits from decades of experience and access to unique data sets that competitors like OpenAI simply don't have. For these reasons, I believe search will remain a powerful growth engine for years to come. Outside of search, other business segments are thriving as well. YouTube's ad revenue climbed 13% year over year, while subscriptions, platforms, and device sales grew even faster, 20% in Q2. Since this includes YouTube Premium subscriptions, it's likely that YouTube in total was one of Google's biggest growth drivers. In fact, YouTube's quarterly revenue nearly matched Netflix's. If valued at a similar PS multiple, YouTube alone could be worth around $500 billion. And YouTube continues to dominate the streaming market, 12% of total streaming hours compared to Netflix's 7.9% and Disney's 5%. Along with an incredible 51% share of live streaming. Given YouTube's user-generated nature, it's far less vulnerable to issues like piracy than other streaming platforms, which makes me confident this dominance will continue. Now, looking at Google's Other Bets segment, revenue was modest at $373 million, up just 2% year over year. Still, this includes Waymo, Google's autonomous driving division. While revenue here is still small, Waymo is projected to generate more than $1.3 billion by 2027. Considering that the robotaxi market is just starting to develop, Waymo's early leadership could turn out to be a hidden gem in Google's portfolio. But the real goldmine is Google Cloud. In Q2, Cloud generated $13.62 billion in revenue, up 32% year over year. On its current trajectory, Cloud will bring in over $50 billion in 2025 revenue. To put that into perspective, that's nearly 10 times Palantir's projected 2026 revenue, and Google Cloud's quarterly revenue alone is almost 3 times higher than Palantir's or Snowflake's 2025 targets. Even more impressive, Cloud is now growing faster than Snowflake, which reported 26% growth in its latest quarter. And this is just recognized revenue. Google Cloud's backlog has reached $108.2 billion. An amount that could, on its own, justify a $1 trillion valuation if Cloud were spun off as a standalone company. About 55% of this backlog will be recognized as revenue within the next 24 months, with the rest coming later. Profitability is also improving rapidly. Cloud generated $2.826 billion in operating income in Q2 with a 20.7% margin, a 141% jump year over year. While that's still only half the margin of Google's services division, Cloud is clearly at an inflection point. It's on track to become not only one of Google's fastest growing segments, but also one of its most profitable. Cloud is also uniquely positioned for long-term growth because of its scalability and flexible pricing. It's a service that works equally well for one-person startups and massive corporations. From my own experience as a data analyst working with GCP and BigQuery at scale, I can confidently say it's one of the best products in the market. Even OpenAI, the creator of ChatGPT, has recently added Google Cloud as a supplier. Anthropic also relies on Google Cloud. This is the perfect sell the shovels in a gold rush scenario. And once companies choose a cloud provider, switching becomes very difficult and expensive due to data migration complexity. That means as data continues to grow, especially in the age of AI, Google Cloud's revenue will naturally keep expanding. So yes, we are fully in the AI era now. Humanoid robots might be next, but after that, the next major technological revolution could very well be quantum computing. I'm extremely bullish on Alphabet in AI, but I also believe the company is set to lead in quantum computing for several reasons. While quantum computing is still years away from mainstream adoption, investor interest in 2025 has surged. Many smaller, publicly traded pure-play companies are chasing breakthroughs here, but I see them as speculative. Alphabet, on the other hand, offers a lower-risk, higher-conviction way to gain exposure to this field. Alphabet has already achieved incredible milestones. Back in 2019, it reached quantum supremacy when its Sycamore processor performed a calculation in 200 seconds that would have taken the world's fastest supercomputer about 10,000 years. Then, in 2023, Google achieved a breakthrough in quantum error correction by creating a prototype logical qubit with much lower error rates, a key step toward practical large-scale quantum computing. In 2024, Google unveiled its next-generation quantum chip, Willow. Not only did Willow scale with more qubits while reducing errors, it also completed a computation in under 5 minutes that would have taken a classical supercomputer an estimated 10 septillion years. This was nothing short of a quantum leap forward. Willow demonstrated Google's unmatched technical strength and rapid progress in this space. Looking ahead, Alphabet's size and resources give it a clear edge. Unlike smaller pure-play companies, Alphabet doesn't need to raise capital. It's buying back shares while investing billions into R&D. Its vast cash reserves, combined with its AI and cloud ecosystems, make it uniquely capable of scaling quantum computing in ways competitors simply can't match. Meanwhile, smaller companies like IonQ, Rigetti, and D-Wave remain unprofitable and heavily dependent on capital raises. Even with recent stock rallies, their long-term viability is questionable. By contrast, Alphabet's breakthroughs, balance sheet, and ecosystem strongly suggest it will remain the dominant player in quantum computing. Finally, let's touch on valuation. Despite all of this, Alphabet's stock is still trading at a steep discount compared to peers. Year to date, the stock has been flat, yet its forward PE is just 19.9, far lower than Meta at 27.4, Apple at 29.8, Amazon at 34, and Microsoft at 33.6. Considering Google's 15% expected earnings growth rate, its PEG ratio is just 1.3, which is close to the textbook ideal level of 1 and well below the broader market's 1.5 to 2. Margins remain strong, profitability is improving, and with Cloud's accelerating growth, I expect earnings power to increase even further. Re-rating Google closer to industry averages would imply a PE between 22.5 and 30. That translates to a price target of $225 to $300 by the end of 2025 and $240 to $308 by the end of 2026, representing 30 to 40% upside from today's levels. There aren't many large-cap stocks offering this kind of growth, profitability, and margin of safety, especially with exposure to AI and quantum computing. Thanks for watching, and I'll see you in the next one.